You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. At Fidelity, you'll always get a great value for your options trades. And with powerful investing tools that provide clear next steps, plus independent research and a wide range of investment types, we can help you make better trading decisions. Learn more about options trading with Fidelity at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Good morning. Today is October 18th, 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Thursday. First thing to know is the Fed is to push ahead with rate hikes. Jobless claims in Philly Fed are on tap. Markets will continue to digest the minutes from the latest meeting of the Federal Reserve while looking ahead to data on the U.S. labor market and the regional manufacturing survey to be released later on Thursday. The Fed minutes showed that policymakers had some doubts about the future path of the economy, but were united on the need to hike rates in September and anticipated continuing with plans to gradually increase rates with one more this year and perhaps an additional 3 in 2019. In economic indicators to be released Thursday, the weekly jobless claims numbers come in at 8:30 a.m. Eastern Time. Economists expect that claims for the first-time unemployment benefits dip slightly to 211,000 from 214,000 the week before. Labor numbers have been consistently good, with this week's latest JOLTS report showing job openings at a record level. Second thing to know today is travelers are set to release earnings as reporting season revs on. Earnings season remained in focus for investors as around 10% of S&P firms have rolled out numbers for the third quarter. As of Wednesday's close, 54 S&P companies have published results, with 81% beating profit estimates, with growth of 26.1% and 68% topping consensus on sales, with growth of 7.9%, according to the Earnings Scout. The third thing to know today is U.S. futures point to a lower open amid WTO warnings and higher bond yields. U.S. futures pointing to a lower open on Thursday as the World Trade Organization warned of the economic risks of trade wars, bringing back into focus the reigning dispute between the U.S. and China, while heightened expectations for future rate hikes on the back of the Fed minutes pushed U.S. bond yields higher. Without action to ease tensions and recommit to cooperation and trade, we could see serious harm done to the multilateral trading system, WTO Director General Roberto Azevedo said. The long-term outlook consequences of this could be severe. Fourth thing to know today, oil continues lower as inventory build ways. Oil continued to trade lower on Thursday adding losses of nearly 3% in the prior session as a surprise rise in U.S. stockpiles weighed on prices, while geopolitical tensions, the upcoming deadline for U.S. sanctions on Iran, and continuing concern over production have all been factors involved in recent market activity. U.S. crude stocks rose 6.5 million barrels last week, the U.S. Energy Information Administration said on Wednesday, the fourth straight weekly build and almost triple what analysts had forecast. U.S. crude futures fell 0.96% to $69.08 by 6:02 a.m. Eastern, while Brent oil traded down 1.04% to $79.29. And the fifth thing to note today, the Chinese yuan hits January 2017 low. The Chinese yuan moved slightly higher against the dollar on Thursday after hitting its lowest level since January 2017 overnight, despite the fact that the U.S. Treasury avoided labeling the world's second largest economy as a currency manipulator. In its semi-annual Forex policy report, the Treasury Department declined to label China or any other trading partner of the U.S. as currency manipulators, but it noted that the Chinese currency practices were a source of particular concern. The Treasury also added that Beijing and some other countries, including Germany, Japan, and India, have been put on a watch list. U.S. Treasury Secretary Steven Mnuchin had said over the weekend that currency issues would be a necessary component of any trade discussions between the U.S. and China. Our second story today is from MarketWatch.com. Chinese stock markets hit a fresh 4-year low to lead the Asian region lower. Asian stock markets fell Thursday, including a steep retreat in China, after Wall Street logged losses and Federal Reserve meeting minutes suggested more U.S. interest rate hikes ahead. Chinese stocks led the region's decline. The Shanghai Composite was down nearly 3%, and the Shenzhen Composite fell 2.7%, as both hit fresh 4-year lows. In Chinese trading, oil stocks were among the weakest plays, while tourism and winemakers also underperformed. China International Travel Service, one of the consumer white horses, fell another 6.8% after dropping the 10% daily limit during Wednesday's session, as gambling reportedly isn't coming to Hainan Island as some had hoped. Also, on Wednesday, the U.S. Treasury declined to label China as a currency manipulator, but said it was concerned about the yuan's recent weakness. Our final story today is from investing.com. Trade-off. China soybean imports set for biggest drop in 12 years amid tariff conflict. China's soybean imports are set to drop by a quarter in the last 3 months of 2018, their biggest fall in at least 12 years, as buyers curb purchases amid the Sino-U.S. trade war and high domestic stockpiles. Soybeans, crushed to make protein-rich animal feed ingredients and vegetable oils, have been at the heart of the tit-for-tat trade dispute between the world's top two economies. China in July imposed a retaliatory 25% import duty on U.S. soybeans as part of the conflict, a saga that has gathered steam since then with the introduction of fresh tariffs on other products. Soybean imports by China, which buys 60% of the oilseed traded worldwide, will likely decline to around 18 to 20 million tons in the fourth quarter, compared with 24.1 million tons in the same period last year, traders say. And that, ladies and gentlemen, is news you can use for today, Thursday, October 18th, 2018. Your Options News Rundown. I'm Dan Passarelli. Trade smart and have a great day.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com. the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.